Stocks on Wall Street end mixed as investors weighed Trump's tariff announcements. Dow sees a sharp reversal in gains to end more than 200 points in the red. Asian markets mirror Wall Street's move. The Nifty is indicating a lower start for our own Indian markets. Crude oil prices slipped as hopes for a diplomatic resolution to the war in Ukraine put pressure on the prices. On the other hand, gold prices rise to record high and then come off sharply after the United States imposes tariffs on the imports of 1 kilogram and 100-ounce gold bars. Brazil's President Lula da Silva dials Prime Minister Modi to discuss the fallout of Donald Trump's 50% tariffs on both countries. The two leaders pledged to deepen bilateral cooperation in areas ranging from trade and energy to defense and technology. Russia's President Putin will visit India later this year, says National Security Advisor Ajit Doval, who is on a visit to Moscow. Prime Minister Modi will visit China for the first time in 6 years on the 31st of August. Chinese embassy calls both nations to deepen trust and widen cooperation. And in key earnings today, SBI expected to report a stable quarter with loan growth outpacing industry, while Tata Motors is expected to report a weak quarter. Also watch out for numbers from Grasim. Good morning in the Mumbai News Centre. I am Vamakshi Doria. You're watching Power Breakfast. Well, it's the last trading session of what has been an action-packed week. There's a lot lined up, but first let's take a look at what the Asian markets are doing this morning. It's a mixed-looking screen for now. The Seng is down almost 0.7%. The Taiwanese index, on the other hand, is doing fairly well, up almost 0.2%. On the other hand, the Topix in Japan has hit a record high, has crossed the 3,000 rupee mark, the $3,000 mark for the first time. Apart from that, when you look at the Kospi, that is not doing too well in trade today, down almost 0.4%. The Nikkei, though, on the other hand, is one of the markets that is gaining the most in today's trading session, up almost 1.9%. But let's take a look at what happened in Europe. Markets in Europe ended the trading session largely higher after the Kremlin says Russian President Vladimir Putin would be meeting with US President Donald Trump soon. The German DAX climbed 1.1%, while the French CAC added 74 points. The British FTSE ended 63 points lower. Well, that's all the global market action, but how will all of these overnight cues impact our own Indian markets? We now have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, let me start off with how the trade setup looks like. Now, yesterday's trading session marked a phenomenal recovery from the day's lowest point. The market recovered almost 300 points and closed in the green. And the trigger for that was renewed hopes of diplomatic dialogue between the US and Russia and reports of Putin's visit to India. Apart from that, when you look at the mid-cap as well as the small-cap end of the market, that too saw a very good recovery. In fact, they outperformed what the benchmark indices did in yesterday's trading session. Sectoral indices, most of them ended in the green, and the gains were led by Nifty Media, IT, Pharma. On the other hand, Nifty Energy as well as Realty were the only two indices which were in the red. Now, the handover that came in from the US markets, it's a little mixed. We did see the Dow Jones as well as the S&P 500 close in the red, but on the flip side, the Nasdaq did quite well, up almost 0.4%. As far as today's trading session is concerned, we'll be watching out for a whole host of stocks reacting to their numbers that came in post-market hours yesterday. Take a look at Cummins India, HPCL, BSE as well as Godrej Consumer. Today, we'll be watching out for numbers from SBI, Tata Motors, Siemens, Hindustan Aeronautics as well as Grasim. Other than that, a cabinet meeting is scheduled at 1 p.m. PM Modi will be discussing the impact of tariffs with ministers. Watch out for Nestle as well because the stock goes it's the X date for their bonus issue, which is in the ratio of 1:1. The GIFT Nifty will also come up for you on the screen. For now, it's a mild start in the negative for the Indian market. So let's see where the session goes. But over to Upasna now, who will list out all the stocks to watch out for in trade today. Good morning, Upasna.
Good morning. First up, let me start with LIC. It's a beat to our poll. The new business premium up 5% and VNB margins also saw an uptick of nearly about 146 basis points at 15.3%. Next up is Titan. Revenue and margin is a beat versus poll. The revenue is up about 25%. Margin stood at 11.1% versus 9.4%. on a YoY basis. Next up is Godrej Consumer. Revenue is in line, while PAT and margin is a miss as compared to our poll. Revenue is up 10%, margin stood at 19% versus 21.7%. Next up is Biocon. It's a slight miss in terms of numbers. Revenue growth saw an uptick of nearly about 14.8% versus estimates of 19% growth, and margin stood at 19% versus 11.9% on a year-on-year basis. Metropolis Healthcare is the next one on our radar. Strong revenue growth, but margins lower due to high employee cost. Revenue saw an uptick of 23%, margin stood at 23.2% versus 25.2%. Schneider Electric is the next one. Net profit is down about 15%. Revenue is up just about 5% on year-on-year basis. Next up is Cummins India. It's a beat across the board. Revenue saw a growth of nearly about 26%, and PAT is also seen an uptick of 40% on year-on-year basis. Crompton Consumer is the next one. It's overall a weak quarter. It has missed the street estimates, and revenue is down by 7% on year-on-year basis. AU Small Finance Bank also in focus as the bank receives in principle approval from RBI to become a universal bank. And lastly, according to sources on Bharti Airtel, promoter entity, that is Indian Continent Investment, is likely to sell 0.8% equity of the company via block deal. So overall, it's quite an exhaustive list today, Vamakshi.
Well, thank you so much for that, Upasana. An exhaustive list indeed. But finally, we now have Sudarshan joining in with cues from the F&O space. Sudarshan, good morning. What are you watching out for?
Good morning, Vamakshi. So yesterday we saw big intraday recovery, and that helped both Nifty and Nifty Bank closing above the major key levels. But for today, GIFT Nifty is indicating again start with minor cuts. Now, if you look at the flows in the cash market, you will see that FIs have sold nearly 5,000 crore and DIs have bought almost rupees 11,000 crore. But do factor in, yesterday we saw two major block deals of Kotak Mahindra Bank, where FII was a big seller, and that selling amount was of rupees almost 2,100 crore. And in DIs, if you have seen this buy figure of almost 11,000 crore, that includes also Kotak and Zomato block deals of almost rupees 8,500 crore. So do factor in that. But now we did see intraday recoveries, but if you look at the in the index futures, FIs continue to sell. Yesterday also they have sold more than rupees 1,100 crore. Again, they continue to add positions in the short side. Yesterday they have added more than 6,800 contracts on the short side, and now FI's long exposure remains around 9%, and on the short side it's 91%. So if there is any positive news, there is a chance that we might see a big recovery again. Now, what's happening on the option front? Again, action happening between 24,500 to 24,800, and that's the reason support remains around 24,470 and resistance remains around 24,800. Now, what about the stocks? One stock that remains in the band, that is PNB Housing. One stock that was expected to go in the band was RBL Bank, but it did not go. Apart from this, keep an eye on two more stocks, that is Lupin. Yesterday we saw short covering because company had reported Q1 earnings. Earnings were in line, and also commentary was positive. And apart from that, NCC has been in focus after the commentary because company has managed to retain the guidance that it had given for FY26.
Well, thank you so much for that, Sudarshan. The bulls would be hoping, fingers crossed, toes crossed, everything crossed, to end the week with a bang. But let's move to a very short break. Up next, we get you a whole host of global updates, so stay tuned. Welcome back. You're watching Power Breakfast on CNBC TV18. US President Donald Trump has said that there will be no trade negotiations with India until the dispute over tariffs is resolved, following his administration's decision to double down tariffs on India. Well, we also spoke to economist Surjit Bhalla and diplomat Vikas Swarup on the tariffs imposed by the US on India. Listen to what they had to say.
We should be opening up. I think it is a win-win. Agriculture, we are now in 2025. We have surplus grain. We are exporting, and our exports to the US in terms of agriculture has been a success story in recent years. So why not try and open it up? So I think the big mystery to me is this projected belief that opening up of agriculture will be bad for India or bad for the farmers. I think it's just not supported by any empirical evidence whatsoever.
I think he's miffed at our repeated snubbing of his role as the chief architect of the ceasefire between India and Pakistan. Because now Trump has, I think, repeated about 25 times that he was the one who got India and Pakistan to agree to a ceasefire. He was the one who got India and Pakistan to stop a so-called nuclear conflagration in the subcontinent. And contrast the approaches of the two countries. On the one hand, you have Pakistan, which has publicly acknowledged Trump's role in bringing about the ceasefire and has nominated him for a Nobel Peace Prize. And on the other hand, you have India, which has declared in its parliament that there was no external mediation at all and that the ceasefire was mediated directly between the DGMOs of India and Pakistan. So obviously Trump would be miffed.
Do you expect increased trade negotiations, since you've announced the 50% tariff?
No, not until we get it resolved.
Well, and in a bid to strengthen ties amid Trump's trade threats, Brazil's President Lula da Silva dials Prime Minister Narendra Modi. Remember, this comes as both countries get hit with the highest tariff rates from the US at 50%. The two leaders agreed to enhance cooperation in trade, technology, energy, defense, agriculture, health, and people-to-people ties. They also exchanged views on regional and global issues of mutual interest. Well, separately, Brazilian president also said that he saw no room for direct talks with Trump as US tariffs of 50% on Brazilian exports took effect. In an interview from his presidential residence in Brasilia, he said, and I quote, "My intuition says that Trump doesn't want to talk and I'm not going to humiliate myself." The leader also said that Brazil is not about to announce reciprocal tariffs. Well, India's National Security Advisor Ajit Doval has said that Russian President Vladimir Putin will visit India soon. According to a Reuters report, the Russian leader could visit by the end of the year. Speaking in Moscow alongside his Russian counterpart, Doval said that the high level of engagements during his visit was substantial and fruitful.
We have got a very special relationship, a long relationship, and we highly value our strategic partnership. We have had high-level engagements, and these high-level engagements have contributed very substantially. We are very excited and delighted to learn about the visit of His Excellency, the President of Russia, President Putin, to India. I think that the dates are almost finalized now. The more important thing is this, that is, these summit meetings have always been the watershed points.
Meanwhile, the Chinese embassy spokesperson has responded to Prime Minister Narendra Modi's visit to China that is scheduled for later this month. The spokesperson said, and I quote, in today's complex landscape, it makes far more sense for both nations to deepen trust, manage disagreements, and promote peace in Asia and globally, end of quote. Remember, the Prime Minister's trip to China will be the first one since the Galwan clash in 2020. And in the US market, Wall Street ended mixed. The Dow tumbled over 200 points. S&P 500 ended just below the flat line, while the tech-heavy Nasdaq was the outperformer, ending with gains of 0.3%. CNBC's Angelica Peebles gets us a wrap of all the action on Wall Street.
U.S. markets were mixed across the major indexes in Thursday trading, giving up early gains from a tech surge after President Trump unveiled new chip tariffs with broad exemptions. The Dow tumbling 224, the S&P 500 down 5, and the tech-heavy Nasdaq climbing 73. President Trump signed an executive order Thursday that seeks to allow new investments and potentially riskier options for your 401k. That includes private equity, cryptocurrency, and real estate. The order directs the Labor Department to work with Treasury and other federal agencies to determine what regulatory changes need to be made to expand private market access to the plans. Shares of chip-making giant Intel were down 5% Thursday after President Trump called on the chipmaker's CEO to resign immediately, arguing that he's conflicted over alleged ties to China. The demand came after Republican Senator Tom Cotton wrote to the company's board about new CEO Lip Butan's reported investments in dozens of Chinese entities. Intel has yet to comment. That's what's happening here in the U.S. Back to you in Mumbai.
Well, thank you so much for that update, Angelica. But let's hear out what Timothy Mole of Goldman Sachs had to say on how the market is reacting to Trump's 100% tariff on chips and his take on India's total tariff rate at 50%.
First, there's been a great deal of uncertainty about the tariff environment for reasons I think which are pretty clear. The fact that we actually have hard numbers, maybe there's need some fine tuning, as Lynn was just mentioning, but they're hard numbers pretty much across the board, means that the uncertainty level has diminished. And you can quantify that with publicly available economic policy uncertainty indices. The market really, I think, is wanting clarity, not just the market, but actual manufacturers. Because in an environment where you don't know what the rules of the game are, it's very hard to commit capital and make investment decisions. And that's especially true for the very large, big ticket investments, such as is the case for semiconductors. Our economists have quantified the risk here that if the full 50% tariffs are implemented, then that could mean an additional 0.3% downside to our GDP forecasts. And we've tried to quantify that in terms of the risk to earnings, which could be in the order of 2-3%, perhaps a bit more, to our MSCI India earnings forecasts against a baseline expectation of 11-12% growth this year. So I think that the Indian market, which is expensively valued, still at 22 to 23 times forward earnings, now faces an additional headwind, and I think that supports our somewhat less immediately positive view on the market, where we're market weight as opposed to overweight China, Japan, and Korea.
Well, on that note, let's slip into a very short break. Up next, we get you cues from the commodities market, so stay tuned. Thanks for staying tuned into Power Breakfast. Let's first look at SBI. That company will be reporting its Q1 earnings today. What are the key expectations? Gaurav joins in with more details. Gaurav?
Well, yes, SBI will be the last big bank to come up with the earnings. And when we talk about expectations, we're expecting good set of numbers in terms of loan book growth. Now, remember, SBI has the largest loan book, but even after that, Street is expecting around 12% growth on a year-on-year basis for SBI. And when it comes to deposit, they're expecting 10% growth. As a result, now net interest income, they're expected to grow at around 1% on a year-on-year basis. This will be a flattish, and this is because of the repo rate cut, and this will actually add some pressure on the cost of funds. PPOP, which is pre-provisional operating profit, there we may see a growth of around 2 to 3%. And after that, when it comes to profit, we may see a decline of around 2% on a year-on-year basis. So let's understand these numbers in details. When it comes to net interest income, they are expected to decline on a sequential basis because there will be some pressure on cost of funds. And as a result, net interest margins are also likely to decline almost by 10 basis points to around 2.9%. In fact, management has said that they will be maintaining their net interest margins, or they will try to maintain their net interest margins somewhere in the range of 3%. So definitely all eyes will be on the net interest margins. Other than that, lower operating expenses can actually lead to the operating profit increase of around 3% on a year-on-year basis. When it comes to provisions, Q1 is usually seasonally weak for the agri segment, and as a result, provisions may see a little bit of uptick. And that is the reason why profit is likely to decline almost by 2%. So definitely, these are the numbers. Flattish number is what we're expecting, but no negative surprise specifically from SBI is expected in this quarter.
Well, thanks so much for that, Gaurav. So muted quarter is expected from SBI this time around. But moving on, we now have Manisha Gupta joining us with all the updates from the commodity space. Good morning, Manisha. I guess you have your hands full today.
Oh, well, absolutely. But I'll start with the gold prices because we've seen COMEX hit an all-time high at 3,515 an ounce. Interestingly, when you look at the COMEX gold and the spot gold prices, which we see from London, there's $100 an ounce of a difference into this one. So while the spot gold is trading at 33.80, COMEX gold right now is trading at 34.90. The US is known to have imposed tariffs on import of 1 kg gold bar and 100-ounce gold bar as well. 1 kilo bar is the most traded form on COMEX, and much of this is imported from Switzerland. There would be a tariff impact on Switzerland quite strongly on this because that is the world's largest gold refining hub. So very, very volatile gold prices is what we are dealing with right now as markets learn to understand the impact of this and the clarity upon this as well. On the other side, you have the crude oil prices, which are trading at a one-month lows, down 5% on this week. This is going to be the worst weekly decline since the month of June. The street is now watching out for the US and Russia presidents that could meet in the coming days, and that seems to be impacting the prices right now.
Well, thank you so much for that, Manisha. That's all we have on this edition of Power Breakfast. But first, before we go on to the next story, let's take a look at what the GIFT Nifty is indicating. It's a negative start. It's almost 27 points lower. So it's where we started off the show with. Nevertheless, we will be hoping for a recovery. At least the bulls will. Take a short break then. Bazaar Morning Call comes up next.